Welcome to the Eurex Focus Day, where we're going to take a look at daily options in the first hour and talk about VSTOXX and VSTOXX strategies for a little bit more than an hour in the second half of today's program. We've got a really great lineup of speakers, folks from the sell side, folks from the buy side. Myself, I think everybody's going to be tired of hearing my voice by the end of the 2 hours plus, as I'll be moderating just about every session. We're going to start off talking to Dorte Carlson from Eurex. Then we'll speak to Paul Vandermeer from IMC, a bit about what he's seeing on the market making side. And then Abi Deb will give us a presentation, and Daniel Kraus is going to join him. We're going to talk about just what they're seeing within the markets. As always, we got to do a little bit of housekeeping. Then we'll bring Dorte on. We are abiding by Chatham House rules for the webcast. Please don't quote directly or reference the webcast without written permission from either the speakers, both the speakers and the organizers, excuse me. Please send in questions. I'll be trying to pass along questions that are relevant. And if we don't get to a question that comes in, we'll do our very best to follow up with you. But hopefully we should be able to take care of any questions that come in. The webcast is being recorded, and like all of us on our end have done, close other browsers or any applications that might have some streaming going on that could cause the video to be a little bit choppy. So with that, I'd like to bring Dorte on.
Thank you, Russell.
You betcha. So we've been dealing with each other for a little over a year, and I've been paying very close attention to both the EURO STOXX 50 daily options and the DAX daily options as well. You guys launched them on my birthday, so I'm always going to know that late August was the launch for the options, and I did do a review of the price behavior of the options over the past year. From your perspective, from the exchange perspective, how do you think the first year's gone for daily EURO STOXX 50 options?
I think it has been an interesting year, I would say. It has been mostly good, but it hasn't been smooth sailing all the way through. So first of all, there was the whole readiness process, getting all the Eurex members up and running with the new product. That process took a lot longer than we initially expected, given that daily options were not a new concept when we launched it. They already existed in other markets. But the truth is that only within the last couple of weeks, I would say, we have actually reached the stage where all the major market participants are able to trade, to clear, and to offer the product to their clients. So that has actually been quite a long process. When it comes to the volumes, so if we look at Q3, we actually reached average daily volume in the EURO STOXX dailies of around 32,000 contracts, which, to be honest, isn't too bad for a relatively new product. At this stage, we would have liked to see even higher volumes, but it's also fair to say that daily options, at least in Europe, are still in a growth phase. Just from Q2 to Q3, we saw a growth of almost 20% in the EURO STOXX dailies, and we expect there's a lot more to come. If we look at who are actually trading these products, so I think we have quite a nice mix of asset managers, hedge funds, and retail. And people always ask me about retail, and of course, as you know, we don't have the same retail participation in Europe as they do in the US. Nevertheless, I would say we have had a reasonably good interest from the retail community for this product. So unfortunately, we don't have full transparency, but it's our estimate that in the EURO STOXX dailies, approximately 5% of the end client flow comes from retail clients, and the equivalent number for the DAX dailies is actually more than 50%. So I guess you could say at this stage, the DAX dailies are to a high extent a retail product.
Sorry, I'm going to curveball you for a second here, but because
sure.
the DAX contracts notional wise a lot larger than the EURO STOXX 50 contract. That's correct, right?
Yeah.
Yeah, and so I'm just, when you say that, I'm surprised, because I would think retail would gravitate more toward a smaller contract. So
No, but the
that was
DAX
just a
has
little
always,
surprising to me.
yeah, the
Yeah.
DAX has always been a very much focused product for retail clients, right? So I guess to us it isn't that surprising, but it's still quite a high percentage of the participants in DAX that are retail.
And
And
I was
also
just
I
gonna
wanted,
go ahead. Go ahead.
when we're speaking of clients, I just wanted to mention a fourth client group, which are the QIS desk and the banks. I believe we are actually going to hear from one of them a little bit later. So I think there are currently a couple of QIS desks who are already active in our product. Based on the feedback we are getting from the banks, we also think that the QIS could potentially be quite an important source for growth over the next year or so. So that is quite interesting, I think. So yeah, to sum up, it has been quite a good year for daily options, but we believe there's still a lot more to come.
Is there, as far as the volume, are you seeing any interest from the U.S.? And I personally, I think the EURO STOXX 50 dailies are a great product if you're a U.S. trader, because of the time that they close. It's kind of, as things are calming down in the U.S. And I know we're going to talk, I think Avi's going to talk a bit about the market cycle in Europe. But I kind of like having a market that closes at 10:30 or 11:30, depending on where I am in the world at the time, and offers opportunities to trade around the close, etc. And at a time when the U.S. counterparts probably aren't trading that well.
Yes, I mean, we do see interest from the US, and we also know for a fact that there are some of the US hedge funds that are already trading this product. To be fair, I would still say, again, we don't have full transparency, but I would still say the majority of the volume come out of Europe, to be honest. Part of this reason is that there have been a few hurdles for the US clients, and that is something I will, I think, address a little bit later.
All right. So what efforts going forward? I know you guys have done a lot of work to get everybody on board, make sure there's sufficient liquidity, et cetera. What other efforts are you guys going to be putting in place to try to enhance volume growth?
Well, one thing we are doing is we do quite a lot of, marketing and information and education, such as this focus day today. But also specifically for buy-side clients, we are actually currently offering a fee reduction of almost 50% in the EURO STOXX dailies. So fees can be, a somewhat controversial topic at Eurex, but we do acknowledge that for some relative value trades, for some systematic strategies, fees can be a relatively important factor in the profitability of the trade. So we are currently offering this fee reduction for 1 year, but if it turns out that it actually has a positive effect on net revenues, we actually intend to make the reduction permanent. And one thing we would really like to achieve, where the fee reduction can potentially help, is to get more of the systematic funds, especially also the systematic funds in the US, on board. So currently, if you look at the volumes, it very much indicates that it's mostly discretionary traders who are active in the product. So the volumes, they vary quite a lot from day to day, depending on, publication of macro indicators, geopolitics, market sentiment, etc. So if we could get more of these systematic funds, and that also includes QIS desk, into the product, that would give a boost to liquidity also on the days where there isn't something spectacular going on in the market. So that is something we would really like to achieve. On the retail side, we also have a lot of things going on. So we have talked about the retail initiative before, where we work closely together with a number of retail brokers trying to promote our products. And daily options are very much an important part of this initiative. Specifically here in 24, I also want to highlight that we have seen almost an explosion in demand for educational webinars for daily options and options in general. So of course, we hope that all this education results or translates into volumes over time. But actually, it isn't just retail in Europe that we are targeting. We also have our eye on a few selected markets in Asia. So retail in Singapore and Hong Kong are already able to trade our products. And we hope that Korea and Taiwan are going to follow in the not too distant future. The final thing I would like to mention to this question, Russell, is that we are, of course, in constant dialogue with the clients, and we honestly try to remove all the hurdles that the clients point out they see for trading daily options. One hurdle was the relatively high cost of trading these products, and we're trying to address that by lowering the fees. Another thing which has been pointed out specifically by hedge funds in the US and in the UK is the need to be able to trade the delta hedge on market close, so it actually matches the end of day expiry of the options. And hurdles for, you ask about US clients, so that is something we've heard a lot from US clients. But as it happens, we actually do have a product which is very suitable for that purpose. So via our so-called MOC futures, or market on close futures, you can actually do a basis trade of EURO STOXX 50 futures. And currently we have quite a few initiatives going on, trying to improve liquidity, trying to improve tradability of that specific product. Most recently, we achieved CFTC approval, which is good for the US clients, and the product will actually be tradable in the US starting Monday next week. So there are quite a few things going on. Some of them I think will have effect already over the next couple of quarters. Others are a little bit more long term.
Then I'm not sure if you touched on everything that you wanted to hit on there. Any other plans on expanding to other markets or complementary products? I know you just did mention some, but anything else that Eurex maybe has in the works?
Yeah, MOC is quite an important supplementary product,
yeah.
But beside from that, and we're doing a lot of effort on that product, but beside from that, I would say, no, not really. I think at this stage, it actually makes a lot more sense to spend the resources, our resources, the client's resources, trying to get more volumes into the existing products. I mean, to be honest, if we launch a new product which would trade a couple of hundred, couple of thousand contracts per day, would that really make a difference to anyone besides from creating a lot more work? Probably not. But if we could get, let's say, 50K, 100K volume more into the EURO STOXX dailies, that would certainly make a huge difference, both for Eurex and also for our members. So I honestly think that is where the focus should be. Having said that, we are, of course, monitoring the market to see if there are any potential gaps. But yeah, I believe that it's very unlikely that we are going to launch anything new in the foreseeable future within the daily options product suite.
Are there any, and I know this is a more popular thing in the US than in Europe, but are there any ETF providers that are looking at putting together a strategy-based ETF that would use those options?
Not as we
are. And I know the volume's not quite there yet, but it would be one of those things that, I know that there's been some success for US ETFs in the same area, and being prepared if the volume suddenly picks up wouldn't be the worst thing in the world to do, so you could be first to market. That's why I was asking.
It is absolutely a potential area of growth, but at the moment, no, we don't have any product like that.
Fantastic. Well, we hit right on our mark. Go us. So thanks for spending 10 minutes or so with me here talking about I really like the EURO STOXX 50 dailies. I could talk about them for hours. But we're going to switch over to Paul Vandermeer from IMC. Very happy to have him on. During the pre-call, he said we're probably going to be seeing him as public facing a bit more. So that means I got to go hard on him today. In 30 seconds or so, can you give us your background, etc., Paul?
Sure. Nice for having me, Russell. So I'm the DCP lead here in Europe. There's also the institutional sales lead. So I talk to institutions like asset managers, banks, hedge funds. And I guess that's why I'm here, seeing what I'm hearing and seeing in the market.
From the registration list, I know that some of the people you talk to are probably watching you right now. So with respect to daily options in general, but definitely the EURO STOXX and the DAX versions, what have you been? I assume it's more discussions than trading, but what have you been hearing from clients regarding those products lately?
Now we see a lot of interest. Already before the product was launched, a lot of interest, a lot of questions. We're trading slightly every monthly, more and more. It goes slowly. The positive thing I could definitely highlight is it's very, we see a lot of activity on the screens. So put it in numbers. Well, EURO STOXX is struggling with participation on the screen, say around 40%. We see the daily options compared to block trading is like 87% of screen. So that's a healthy sign. And on the institutional side, on the direct counterparty side, we see a lot of interest, especially from two specific counterparties. I will call them structured product desks and hedge funds.
Well, and Dorte kind of brought this up as well. What were some of the challenges with respect to taking on the daily options? I know that you guys have done it in other markets, but and you also mentioned that the PM settlement has created different hedging approaches than we had in the pre-PM settlement world. I think everybody really does prefer PM settled options. So can you expand a bit on that as well?
So put it in perspective. So the EURO STOXX, I guess Europe in general are quite fragmented when the settlement happens. So EURO STOXX it's at 12, but people have exposure to 5:30 to the cash close. So it's great with a daily option that the settlement happens during cash close. So for structured products desks, they can hedge their risk way better. They don't have a gap anymore. For people who like to play events, they have a better opportunity to play events. Now you have more US hours in it to play an event. So that helps a lot.
And Avi's going to talk a bit about this, but you see people playing. I monitor the pricing on a daily basis for the short dated at the money straddles, and I watch how they go up and down. I think that pricing's more volatile than VIX actually, and more volatile than VSTOXX. I think it's more volatile than those 30-day indexes, and it's kind of interesting to get an idea of what the mind of the market is. But do you see people using EURO STOXX 50 dailies to trade US events as well, like the economic numbers that come out an hour or two before?
Yes, definitely, yeah. And you see, especially the hedge funds, they like to play, put some calendars on, buying or selling it, the event. That's the main thing what they do with it.
My feeling with respect to using the options may behave a little bit differently, but if you're playing an economic number that comes out in the morning US, you have a lot less time in the trading day using EURO STOXX 50 options than you do using US options. So I think you get maybe even get more of a pure move that's just related to that event. So
I think you have a really good point. Yeah, if you want to play the payrolls or something, it's a perfect product for that. Yeah.
You can do that, and then your work day is done at 11:30 or so, and then you got your Friday afternoon to yourself there's a selling point right there. So just some of the conversations you guys have had with entities that are hesitant to pull the trigger yet on trades. What do you think is going to take to get them over the hump? And I know volume begets volume. That's always the number one.
Yeah, there's multiple things I can think of. People need to get used to it. It is new. Like Dorte mentioned, we don't really have retail market here in Europe. Retail is hidden in it's partially in structured products. People like trading structured products. So these desks where they hedge their exposure in the past with OTC, and now finally slowly finding the listed market more and more to hedge their exposure. But it's a lot more to gain. And then Dorte also quickly touched on that. Those teams. Yeah, so we are trading with them, but a lot of them still on the side, still not used to it, or some smaller hurdles. It is a different product. It's in the same group, but it's a different code. So people can they need to change something in the system. that can already put them off. It's a different code on Bloomberg. So those are hurdles you can overcome, but it doesn't help. Hedge funds, they show a lot of interest, but they need to see more the trust in liquidity. Like, it's one thing to put on a trade, it's another thing to get out of a trade. But it is going. It's gaining traction, but there's definitely more to gain. And I feel like the quickest thing is, I know Dorte and the rest of the team are working on it, but they can do endless roadshows to a lot of these different structured product desks, and I feel like that's where you can get the number quickly up. Yeah.
All right. Well, I do have I have a question that, and I think I know where this came from, because I've talked about the issues that market makers had when daily options first came out, how they went about managing their book. And the feedback that I got, and this is what the question's about, do you basically treat the daily options and the longer dated Euro Stoxx 50 options as almost two different markets, even though they have the same underlying? Or how are you guys handling your risk with respect to that, because they're so different?
You're right. They are almost like two different books. Yeah, and that's also how we treat it. So if we do, as a market maker, it depends on the size. Certain size we just can hedge out. Another size it's on us to happy to take on the risk and run with it. But we can also go to the US market and find a hedge there. We can also, there are different ways to find hedges. So it's a combination of being happy to hold certain risk and find hedges at different places.
Well, fantastic.
Roger, I actually have a question for you, because
I said it was okay if you wanted to do this, so yes.
Yeah. I know you trade yourself as well, and looking close at the markets. Do you trade the Euro Stoxx or the daily options yourself?
I do. I'm typically selling one-day straddles. It's worked very well in the first year that they've been around, and selling those straddles has not worked in the U.S. markets this past summer. And I'm actually one of the reasons I think I keep tapping on the U.S. market is because I've started to notice that there are actually diversification benefits behind systematically using a U.S. market and systematically using Euro Stoxx 50 at the same time. Because last week, for instance, the straddle, the Euro Stoxx 50 at the money straddle last week, the one-day straddle, underpriced the move all 5 days in Europe. It was, I think, 2 of 5 days it was underpriced in the U.S. So if you'd been selling straddles, you'd have done okay. You would have made a little bit in the SPX last week, but you would have lost some in the Euro Stoxx 50. But they even though they're broad-based equity markets, they do have some different behavior there. And I do think that's why I really do think institutions should be taking a look for diversification purposes to add Euro Stoxx 50 if they're doing something in the other short-dated markets. So, yeah, there's a moderator answer for you. Yeah, usually my personal rule is I don't expand. I just let you guys say stuff. But that got us right up to our time, Paul. I appreciate it. So
thank you.
I appreciate the time. I'll see you at the end of February in Frankfurt, I believe.
Beautiful. Thanks.
Yeah. All right. So our last section here, where we're going to talk about daily options, we've got Abi Deb, who's going to come on and do a short presentation, give me a chance to take a sip of coffee, etc. And Daniel Kraus from FinCam is going to join us as well. Abby, I'm going to let you go ahead and get started on your presentation. Daniel, I'll let you do a quick, brief introduction when I ask you the first question in a few minutes. How's that? Just so we can keep on flowing. So cool.
Been in the kind of financial markets for nearly 20 years, been following obviously the European story, one of the things that struck me when we were talking about the differences between, I guess, the European and the US markets is to first of all recognize that Europe is a very unique market. Even setting aside the smaller kind of retail footprint that we have over here, I think that trying to make parallels on product evolution between the US and European market can sometimes lead to frustration. As you know, we've seen historically, whether it's the VSTOXX based ETNs back in the day versus the equivalent in the US, or indeed the EURO STOXX 50 dailies. But it is something that people want to look at, and so we have done. So some of the slides you see, if you advance to the next slide, we'll find some of the kind of structure of how the market is really in Europe and how different it is in the US. So in the US, more than half of all options traded expire the same day. Right? That's a staggering statistic that is really kind of taken off pretty much since 2022. In Europe, as you see on the left-hand side here, almost 60% of the tenor that is traded is over a month and above, right? And this is something that has been largely stable over time. You can see the growth of the weekly options in the kind of yellow wavy bit at the bottom, and of course the dailies, which account for about 2.5% in terms of the tenor. Now, if you look at in contract terms, the right-hand chart tells you that the third Friday expiries that we have on the EURO STOXX 50 account for pretty much 90% of listed option volume. So we're distinguishing the contract traded versus the tenor of the option, because you can trade that contract right up to expiry. So this is the kind of market that we kind of are where this kind of product has been launched into on the dailies. And I think it's really important to say that despite, let's say, the kind of difference in take-up in the past year on a proportional basis, the subsequent slide will show us that there have been spikes in activity in the EURO STOXX dailies in 2024. So if we advance to this slide, on the left-hand side, we'll see this kind of spiky dark blue line, which is basically all the EURO STOXX dailies, excluding the end-of-month dailies, which is in the light blue, in terms of notional. And you'll see some dates jump out, like the 4th of October, the 6th of September, big non-farm payroll dates where some of these activities spiked. And if you look at the growth in volume, the cumulative volume by day of week, it probably won't be a surprise that it's the Fridays that rule, right? So you can see on the right-hand side, the green line with the Friday contracts really kind of standing out as where we've seen the kind of end-of-day settling options dominate. Now, why is it that Europe is quite unique? Well, we sit in the middle of the global trading day, right? So our, let's say, intraday profile is peppered by the US coming in and potentially injecting volatility. This is something that all traders in Europe have known pretty much since time immemorial. So if you look at the subsequent slide, what we've got here really is a profile of volatility in Europe, looking at the EURO STOXX 50 futures, basically at 1-minute intervals. So what we're plotting on the left-hand side is the intraday volatility. This is basically 10-minute vol using 1-minute returns of the futures through the day. And we've broken it up by day of week, right? So what's interesting, and most people will be aware of, is that the US Open injects vol into the European day, right? You can see that at 3:30 CET, that big jump that you see with the US Open. But what's something that many people will not have clocked, certainly I found this surprising when I first saw it, is that the impact of US data releases on Europe is quite significant. You see that big jump in the red line, which is the Friday intraday vol. This is all Fridays in the last 10 years, right? We see a pretty significant bump up in intraday realized vol when you have the US data releases. And this is essentially the non-farm payrolls, right? More so than the US Open, right? So the US macro has mattered more than the kind of, the fact that the US market comes in and all these new active players start entering the market. And that's been an interesting fact, right? And this will come down to what I think Russell was referring to earlier on in terms of trading US or macro catalysts using EURO STOXX options. And the other thing that to kind of really flag is that, some of the other speed bumps that you see on this chart, the ECB rate decisions, for example, on the Thursdays have actually mattered less for the EURO STOXX 50 intraday vol. So it's really something that has the potential to become a bigger driver of intraday vol, the kind of US data. On the right-hand side of this same slide, you see another chart, which is again quite staggering. This is looking at third Friday expiry days over the last 10 years, the intraday vol profile of that, versus all other days, right? So the third Fridays are in light blue. And you can see that the settlement, of course, accounts for a large jump in intraday vol. And this is something that we would expect, given how we showed that you have almost 90% of the activity in the third Friday contracts. And this is another reason that people kind of watch out for this part of the day to think about whether you have more trend or mean reversion going into this time. So two things to watch out from this slide, of course, US macro, which in the age of inflation, whether it's on its way down or not, and the settlement time. Now, the final slide here really kind of illustrates some of the I would say use cases. Russell outlined one where you can sell options to generate a yield. You could also flip it the other way and say, look, if you want a lottery ticket, the most levered lottery ticket you can buy is a daily option, right? This is certainly true for retail investors looking to punt the market, which has been one use case in the US. Here's one that we used for macro events that are ostensibly US-centric, so the NFP, which has mattered a great deal in the current environment where we're trying to decide whether the US economy will have a landing or not, and so on. But this is using EURO STOXX dailies, right? So these bars are showing you the P&L over the past year of entering the non-farm end-of-day straddle, right? So the Friday end-of-day straddle on the Tuesday before, or the Wednesday, or the Thursday. And you can see the cost of the straddles in the table and the P&L. It looks like on average they've had a positive P&L in the last year. Some months not so much, but certainly the last two that we've seen quite significantly positive. So clearly it's something that highlights one of the use cases that we've been talking about to our clients with some success, I would argue, that you can isolate the macro event risk by looking at the end of day straddles. Now, the regular Friday weeklies do not capture non-farms, right? It's because they settle at 12, and you have the non-farms a couple of hours later. And I think that's certainly something that a lot of people have clocked. Now, are we able to kind of trade that in an immense size? Not yet, but I would argue. But it's certainly something that has that has applications, especially if we build more liquidity in this product. So I'll stop there. And, let's open up the, I guess, session to discuss this and other questions that anybody has.
Fantastic. Thank you very much. You've given me like 3 things to work on this coming weekend. And I like how, and I do like just that last example you were showing. Everybody focuses on the 0 DTE or the options tomorrow. 2, 3, and 4 days out, there are opportunities there. And once I got to interview Ed Thorpe, who came up with counting cards and a couple of other, he's just one of these Renaissance men. And I tried to get him to tell me where he was investing. And all he would say is, I'm always trying to look where nobody else is looking. Everybody's looking at the 1-day options, not as many people looking at 3 and 4 days. So,
in both directions,
more inefficiencies.
Yeah, absolutely.
Yeah. So Daniel, you've been patient. Would you like to, first off, just a real quick self-introduction, and then I'll start to grill you a bit.
Yeah, great. First of all, hello from my side. Thank you very much for having me. My name is Daniel Kraus. I head the portfolio management here at Fincom. Fincom is a Munich-based systematic asset manager, and we run systematic risk management strategies, but then also, for example, short volatility strategies on both sides, short vol as well as risk management, i.e. long vol. We obviously use options a lot, and I think this is maybe why I'm allowed to take part here in this event.
So Abhi just went through an awful lot of stuff. Is there anything you consider new information from what he discussed, or anything worth pursuing trading wise, or did he get you as fired up as he got me?
Well, I liked it very much. I mean, a lot fits very well into my own experience. I like the analyses a lot about how the US market actually drives European markets as well. So I think these charts were really like very insightful, where you could see that the Fed meeting has so much impact on the European markets as well, and that you can really like systematically measure it. I found that very interesting. This is something on a more qualitative level we see as well when we sell volatility, that the open in the US market can have a significant impact on everything. Maybe a few more thoughts on the last slide. So we saw that professional investors like to use these daily options to position themselves around macro events. I think this is a great use case for these kind of options. However, when we think about liquidity in more general terms, I think we have to keep in mind that these specific macro events, they only happen on so many days, right? So on most trading days, nothing like that is there. So for more broader liquidity, I think we would rather need market participants who really trade these kind of options on a daily basis. And I think in the United States, it's really to a significant proportion the retail market, right? And we don't have that in Europe. So I think one of the challenges is and will be, can we have a similar retail market, or can we find other sources of liquidity for all those days where we do not have such a significant specific macro event?
Fantastic. Yeah, I do think to get it, and we keep using retail. I heard somebody refer to them as semi-pro traders recently. I kind of liked that a little bit better than so I just keep
if you see the Twitter sphere or X, certainly some of the comments there are pretty advanced in terms of volatility. But yeah, I take your point. And to the comment on the two-way nature of the opportunities, I think that's very much true in very short-dated options, right? If you look at the US equivalent, put call ratios are very close to parity, which you do not see for longer dated options, right? So you can see activity in both directions, activity or let's say interest in both buying these lottery tickets, but also systematically harvesting premium by selling them. So I think there's a remarkable balance that you can achieve, almost counterintuitively, given how how much leverage you can certainly achieve with some of these options.
Yeah, it's an area that that a lot of people can have been able to take advantage in that way. The things that you were talking about, are there clients that are gravitating towards some of those ideas more than others, or you're getting a lot, where do you get most of the questions when you're talking about the daily options right now? Bobby.
Oh, for me, okay.
Sorry.
I think yeah, I would say a lot of it is on, how much can we get done? Is it like a few thousand contracts? Is it, tens of thousands, which is probably not the place to be. And I think one of the unfortunate, I would say, outcomes of being compared to the US is that when people try to compare with what they can get done in other contracts in the US and they look at the European market, they tend to get disappointed, right? And I think that's one of the reasons why I keep saying, look, you have to have a different hat on when you look at these products. If you look at other options in EURO STOXX 50, the regular monthlies, that market is not as deep as the US kind of contracts, right? So we have to kind of really set our expectations accordingly. But I do think that there is, for those, let's say, if you're a pod in a multi-strategy fund, you're not in a world which is suddenly trying to make a difference at the level of tens of billions of dollars or hundreds of billions and so on. It's more kind of hundreds of millions, perhaps. Then I think certainly some of these opportunities can make a difference. So I have seen some clients kind of coming to me and say, "Oh, we're already doing this, and we are trying to work some of these ideas on the screen." Whereas some of the larger institutions are like, it's not really something that we're able to use just yet.
Daniel, you guys are mostly option sellers, if I am reading that correctly. You can correct me if I'm wrong. But you're mostly looking farther out, and we just talked about 3 or 4 days, more like looking out a month or so. What's it going to take again? And I know the volume is a big issue, but would you guys consider using the daily options to offset some of that risk? Have you ever thought about buying the daily options when a big volatility event's coming up, maybe just to offset the risk associated with your short volatility program? And that's more speculative than hedging, I know.
I thought about it, yes, but to be honest, we would rather hedge ourselves differently. For example, simply reduce exposure right away, right? So we're really looking at this market more from the perspective of diversifying among tenors for our short volatility programs. So maybe as a quick background, we have like this short volatility program, for example, UCITS fund, Fincam Volatility Premium, and I think the first thing which is interesting to mention is most of our competitors in the DAX region, so Germany, Austria, Switzerland, they really focus on the S&P 500 only, whereas we significantly also go short volatility on the EURO STOXX. We think there is some benefit in that diversification, and I think this makes us one of the major volatility providers on the monthly EURO STOXX volatility side. On the dailies, we are monitoring it closely. We would love to do it. We are already doing it on the S&P 500. And maybe circling back to your point before, we would usually not sell options with a time to expiry of 1 day, but rather options with a time to expiry like 4 or 5 days. But we want to do that in a systematic way on a daily rolling basis, and therefore only like these daily options really give us the opportunity to do that, right? So the one comes with the other. We need the dailies, but not to trade like options which expire on the same day or in a day, but to like sell options with 5 days time to expiry on a rolling daily basis. And that's what I really like about the offering. I think what we simply still lack here to really do it is liquidity on the one side, and then the other thing, which is obviously the ultimate decision we need to make, is the volatility risk premium there? Is it attractive? I think once liquidity picks up, there will be an attractive volatility risk premium. Anything else would be very surprising, wouldn't make a lot of sense from an economic perspective. But as of today, I mean, as Abby has shown, right, around these macro events, you wouldn't want to sell these options. So I really wonder, because we are not doing it, I know other vol funds are not doing it. I would guess that hedge fund don't do it. So I really wonder who sells these options around those macro events where, as Abby has shown, it's actually like quite attractive to be on the other side, to buy them, right? So I can only think of market makers like Bank of America themselves, maybe some other market makers. But I think when you do that, delta hedging really becomes a very tricky technical issue. Maybe Abby can comment on that.
Yeah, I think it is. As with any new market, I think it's important to acknowledge that one kind of use case might take off first and create a premium in one direction that becomes big enough for the other side to step in, right? And I kind of get reminded of the evolution of some of this activity in the US. For example, 2022, if you remember, the year that broke the back of duration when inflation came back in a big way, and each CPI print was a major surprise. That was a year that a lot of hedge funds, a lot of asset managers used the dailies and the zero DTEs in the US market to play macro surprises, right? And then, of course, you build a certain amount of directional, let's say, demand, and then you can have the supply side weigh in. So I think we were kind of in that phase of building the kind of use case in both directions, right? I don't doubt that there will be a premium to harvest kind of systematically. How stable that is over time remains to be seen, right? But equally, I feel like sometimes unless you get more volumes, it's hard to really pinpoint what's going on. It's a bit like you observe it, but if you try to trade it, the observation is not, let's say, consistent with reality until it's a more liquid market.
Agreed. Yep.
So with respect to the behavior of the new markets and everything, when I was at an exchange in the U.S., one of the option exchanges, and the weeklies started getting introduced on individual stocks, my automatic assumption was that people would use them to basically, end of lifetime decay. Sell a call option over and over again. Exactly the opposite happened. They were being used more on the long side than and that was buying puts and buying calls, but people were using them for directional trades. I kind of assumed that the implied vol was going to be a little depressed, and it was actually higher than when they got listed, and they used to just be listed with 8 days to go. When they got listed, if you compared that to an option that had been around for a long time and where it normally was with 8 days to go, the weeklies were more expensive, which is not what I was expecting. This question kind of gels with that, and this is really for both of you. With respect to any macro events, would you rather be a buyer? And I'm repeating the question, I have an opinion on it too, but would you rather be a buyer or a seller into various macro events, a long volatility or short volatility? And I know that for Daniel, that doesn't really match up, but just, you can even say it on a personal basis if you want to. And there is a third option there, and the third option is trade. But
let me take the, I guess to begin with, and you'll see what Daniel's response is, because we've got a major elephant in the room, which is the US election that's coming up. And if you look at the implied moves, on the EURO STOXX 50, for example, they're a bit lighter compared to the US, and that makes sense on the face of it because it's the US election, and everyone's focused on that and the US market. But if you look back historically, and way back at all of these election cycles and election week volatility, and I guess we have to use the DAX when you go back, further, because we don't have EURO STOXX 50 data. The DAX or the EURO STOXX move at least as much in volatility terms, right? Realized vol terms in US election weeks, presidential election weeks, than the S&P 500, right? So from that perspective alone, we shouldn't expect necessarily a discount in Europe because it's not it's a US election. So for this particular event, I would say I'd be a buyer. Right, so this is 8th November. So right now, obviously, they're using we're talking about the weeklies here, not the end of day settling options. But it really depends on the event. So I think not all events are created equal. Some, hinge on a major, let's say, if a CPI release kind of makes or breaks the case for the market to believe that, we've seen the back of inflation and so on, that will be one that I don't want to be selling into, right? Whereas if it's mostly baked in, and our feeling is that it's going to be a non-event and there's a premium building up into the options, then I'd be happy to kind of not pare down my shortfall strategy to that event, right? But again, I think it really depends on the event.
And the pricing that goes in as well.
Yeah, exactly.
I mentioned earlier, that number has been all over the place. What you just said is kind of, and Daniel, I'm going to throw this to you, I promise. But what you just said was kind of interesting with respect to more volatility in Europe than the U.S. because I believe VIX is at a premium to VSTOXX right now, and it hasn't been for most of this year. So now that's I love events like this because now I'm going to go see if there's anything to maybe do with VSTOXX versus VIX around the election.
So there's a much bigger gap of VIX to the trailing realized vol than there is to EURO STOXX and trailing EURO STOXX vol, right? And I think people rationalize that, saying that it matters more for the US, but history says that it matters at least as much for Europe.
Daniel, just on the events, because I think a lot of people do like to use short-dated options on events, and I know it doesn't necessarily match up with what you guys do, but any thoughts along those lines?
Yeah, sure thing. I mean, I love that people like to buy these options around these events because this is exactly what makes short volatility strategies attractive, right? There are so many good reasons why you want to buy options around events, but also at other times. And many institutions are also forced to do it, right? And this whole phenomenon is the only reason why there is actually a volatility risk premium. So around a particular event, I mean, it always depends on my personal opinion. If you ask me, as a private person, maybe I would want to be long or short. But in general, if I have the nerves, if I have the liquidity, I would always want to be short because there is certainly, for so many good reasons, an excess demand for these options, and therefore I'm a strong believer that if you do that in a systematic way, standing on the other side, providing that liquidity, you will get a premium out of this.
So far, because in the U.S. now there are, like I said, there's some ETFs that are consistently selling the daily options. I think that's caused a change in the behavior of those options, where they were mostly overpriced in 2022, and they've been mostly underpriced in 2023. I'm sorry, they were mostly overpriced in 2022, and a good portion of 2023. This year, they have not been. Let's get my years off a little bit there. If you get too many participants in one direction or another, do you think that could change the behavior of the EURO STOXX 50 options? And what would you, because the shift was pretty dramatic in the US versions, what would you guys kind of keep an eye out for to see if maybe the risk premium is starting to shrink away?
Yes, I think you're right. I mean, short volatility is a strategy which could become the victim of its own success, right? Because so many people go into it, and then the risk premium shrinks. But I think really there is a limited number of market participants who can afford to implement such a strategy, and therefore I'm quite positive that there will always be a certain risk premium attached to it. And then also, I think we need to have a closer look of whether they really trade volatility, or it's like a more naive approach where you simply sell a straddle or something. So we, for example, we're really big on like making use of the whole volatility skew and doing the delta hedging very frequently, very like on a intraday and stuff. So really like to really extract the volatility risk premium and not have any delta risk coming with it.
Fantastic. We got 1 minute, and Avi started us, so I'm going to let you take us out. Any other thoughts or anything with respect to the EURO STOXX 50 options, or anything else market related? Avi?
I would say on these on the kind of dailies, I think like, I go back to what I started off with. Comparisons with the US can often lead to frustration, because you expect a certain trajectory and we don't see that. I guess when the US exchange that we were talking about earlier listed the Tuesday and Thursday expiries, we saw a real kickoff in zero DT activity. I don't anticipate seeing that in Europe, and that's fine. But I think, as Daniel was saying, we do need the use case to establish itself. So I think the next logical step is to see QI strategies develop on the EURO STOXX dailies. This is something that will happen, I'm sure, with time. I think Dorte also mentioned it at the very start. It's something that, as liquidity begets more liquidity, this is something that will enable more frequent rather than sporadic activity in the dailies. And I think that'll be good for the market, because you have the two-way flow that ultimately makes the market. So I'm hopeful that'll happen, but we need to adjust our expectations on how big that is versus another major market.
And maybe if I can just quickly jump on that, that is happening already. So I have quite a close eye on the research activities on the bank side, and I know that they are working on these kind of strategies a lot. I'm not sure how successfully they sell them already, so that they are really like traded, but they offer these kind of strategies. So the structuring departments, the research departments are working on these kind of strategies.
Yeah,
it's happening.
Yeah, that's right.
I am too, and I haven't found anything really good yet, but I'm trying. I figure now that we have a year of data, I can start doing work on that. Well, gentlemen, I greatly appreciate it. We've gone a minute over, which is, I guess, very close to perfect. This wraps up the EURO STOXX 50 daily option portion of today. We're going to take about a 4-minute break or so, and then we will pick things up with VSTOXX, even though we've already started talking about VSTOXX. So we will be back in about 3.5 minutes.